Now, South Korean companies dominated Asian bond markets this year with record sales. BNP Paribas says investors should keep buying that debt. Now, let's take a closer look with Bloomberg reporter Katrina Nicholas, who joins me here in the studio. Why were investors demanding such a premium to hold Korean bonds?
Well, essentially it was because bond spreads at the start of this year reflected the belief that South Korea might suffer in the same way as it did in the Asian financial crisis in the late 1990s. Obviously, it's a very open economy. It exports a lot of things, and companies back in the late 1990s got themselves into tremendous amounts of debt and essentially ended up asking for emergency loans and bailouts. And investors were worried that that might happen this time round. It actually didn't transpire, and so bond yields have been falling to reflect that. And governments there have actually been encouraging investors to buy bonds, and also Korean banks themselves to sell bonds by doing things like guaranteeing their debt out through to the end of 2009.
And in terms of yields, I mean, some people predicting that Korean yields could match that of the Philippines.
Yeah, exactly. Well, Korean bond yields versus US Treasuries at the moment have fallen about 480 basis points this year. Now, that's down from a high in January of 839 basis points. I think we've got a chart up at the moment that shows that Korean bond yields are about 86 basis points higher than bond yields in the Philippines, and pretty much on par with bond yields in Indonesia. Now, what that's telling you is that investors have become a lot more comfortable with the Korean story. They're comfortable with the economic recovery there, and moreover that companies can pay back their debt. And of course, if you're a holder of these bonds, it's been an absolutely tremendous ride, because remembering that bond prices move inversely to yields, so as yields have been coming down, prices have been going up, and you can see, according to data compiled by JP Morgan, that investors have had a pretty sure and steady rise ever since last November, really.
What if you compare to the rest of the region, the rest of Asia?
Yeah, comparing to the rest of the region, what names are higher than Korea? Well, you're looking at names like India, Taiwan, Thailand. They're countries where investors think there's a riskier premium there, and there's more of a chance that companies won't be able to pay back their debt. Thailand's an interesting one because even though they've had a lot of political problems there, it really hasn't had an undue effect on companies' sort of ability to buy bonds. And now you've actually got some of the riskier borrowers there looking to tap the US dollar market because there's simply not sufficient investor demand in the local baht market.
All right, Katrina, good stuff. Thank you so much for that.